All right, welcome back. The crypto market is trying to get back on its feet after a huge liquidation event this past weekend. But honestly, the recovery is looking incredibly fragile. Bitcoin's just kind of hovering right now, and the big question is, what happens next?
Yeah, that's the number that shook the market. $20 billion. That's how much was wiped out in liquidations. We're talking about a massive amount of leveraged positions, basically bets made with borrowed money that just got vaporized in the blink of an eye. It was an absolute cascade of forced selling. So today, we are going to unpack all of this chaos. We'll dig into what really triggered this massive crash, but we're also going to look at the hidden story, what the big institutions were doing while everyone else was panicking. So is this the beginning of a bigger collapse, or is it actually one of those rare buying opportunities in disguise? Okay, let's dive right into this $20 billion shockwave. You have to understand, this wasn't just some random Tuesday price drop. No, this was a perfect storm of different factors that put the entire market under some really intense pressure.
So this wasn't just one thing. It was a few powerful forces hitting all at once. First, you had the big one, geopolitics. Renewed trade war fears between the US and China totally spooked investors. That fear then slammed into a market that was, frankly, dangerously overleveraged. Way too many people had borrowed money to make huge bets. So when the price dipped, bam, domino effect.
What we all witnessed was a textbook flash crash. You combine all that high leverage with high-speed automated selling, and well, once the selling starts, it just feeds on itself. It accelerates at this breathtaking speed, and before you know it, prices have fallen off a cliff in just a few hours. And on top of all that, you have the big money. Even as the market was trying to find a bottom, Bitcoin ETFs saw more than $755 million in net outflows. Now, that is a major headwind. It tells you that the big institutional players were, at least for a moment, running for the doors.
But, and this is a big but, while all the headlines were screaming crash and that ETF data looked really bad, a totally different story was playing out right beneath the surface. See, not everyone was selling. And this is where it gets really fascinating. You had this huge split. On one side, you had panic. The crash was mostly driven by retail fear and all those forced liquidations. But on the other side, the major institutional players saw an opportunity. They started buying the dip, which is a classic move, right? They used the panic to accumulate more assets at a huge discount. It's a wealth transfer pattern we see over and over in crypto.
And look, this isn't just a theory. We've got the receipts. We saw some huge, well-known players making serious moves. Bitmine grabbed a massive chunk of Ether, and of course, MicroStrategy did what they always do. They added another $27 million worth of Bitcoin to their stash. These aren't just little bets. These are major strategic buys that signal some serious long-term confidence.
Now check this out, because this shows the market's reaction wasn't all the same. While Bitcoin and Ethereum took a hit, look at BNB. It didn't just survive the storm, it actually shot up over 10% to a new all-time high. That tells you something important. In moments of panic, capital rotates into assets that people see as having strong, established foundations, a real flight to quality. Okay, so let's zoom out a bit. Let's look at the bigger picture and see how all this short-term chaos fits into where the market is going long-term. Because believe it or not, there are some fundamental shifts happening right now that could make this whole space much, much stronger. One of the key things to watch on the horizon is something called the Genius Act. Now, this is all about creating clear legal rules for stablecoins. Why should you care? Well, because stablecoins are basically the plumbing for the entire crypto world. Getting regulatory clarity here would be a massive shot in the arm for institutional confidence. It could help turn stablecoins into a real global payment system. And it's not just about stablecoins. There's this bigger push for regulatory clarity in general. You know, figuring out who's in charge, the SEC or the CFTC, getting that sorted out would remove a huge cloud of uncertainty for big investors. And at the same time, you've got this trend of corporate adoption just picking up speed. When you have dozens of public companies holding Bitcoin on their balance sheets, well, that builds a whole new foundation for the market. So what you have here is this really interesting crossroads. On one hand, you have all this intense short-term fear being driven by geopolitics. But on the other hand, you have these long-term fundamentals that are actually getting stronger. So how in the world do you navigate that? Well, first, let's take the market's temperature. The Fear and Greed Index is sitting at 38, which is squarely in the fear zone. The anxiety is real. But as any contrarian investor will tell you, moments of extreme fear can often be the best time to look for opportunities because it might mean the market is oversold. Here's another key clue: Bitcoin dominance. That's just Bitcoin's slice of the total crypto market pie. And right now, it's really high. What that tells us is that when things get scary, investors tend to pull their money out of riskier altcoins and move it into Bitcoin, which they see as the safer harbor. It also tells us that a big alt season rally, well, it probably isn't starting tomorrow.
Looking ahead, you're going to want to keep your eyes on a few critical things. First, any news on the US-China trade situation. That could move the market instantly. We're also watching for any updates on that Genius Act. And maybe most importantly, we need to see that Bitcoin ETF flow data. We need to see if the big money starts coming back in.
So, in a market this choppy, smart risk management is everything. The key takeaways? Probably a good idea to cut back on any high leverage positions. Know the difference between a blue chip asset like Bitcoin or Ether and a super speculative token. And if you're in it for the long haul, this kind of volatility can be a great time to dollar cost average. Right now, protecting your capital is job number one. And that brings us to the final really big question. We know that this geopolitical risk was the trigger for the crash. But what if that same global instability is the very thing that eventually pushes investors towards a decentralized asset like Bitcoin? Could the biggest risk factor actually be the catalyst for the next massive move up? It's a question hanging over everything, and the answer could very well define the next chapter for this entire market. What do you think? Let me know. Thanks for tuning in.